Welcome back, everyone. Next, we have an update from XBP Europe Holdings, Inc. Trades on the NASDAQ under the symbol XBP, or Exchange for Bills and Payments. It's a pan-European integrator of bills, payments, and related solutions and services seeking to enable digital transformation of its more than 2,000 clients. Happy to welcome back CEO and Director Andrej Jonovic. Nice to see you again, Andrej.
Nice to see you, Anna.
All right. So you just reported your first quarter results. So what key takeaways do you want investors to walk away with?
Only a couple of points. I think the numbers speak for themselves. The last time we spoke was in January. Since then, we have filed our 10K, and now last week our 10Q for the first quarter. We've had third straight quarter of revenue growth, and we're seeing the things we were hoping to see in terms of our margin expansion. We reported gross margins of 30.1%.
Okay, fantastic. And if you can provide an update on how that ramp up is going for HMPO and Autobahn, and how are you doing versus the expectations out there?
Sure. So I think we'll be posting a deck that covers some of the highlights, whether they're Q1 specific or more general in nature. So that will be available on our website. On the investor page. For the two largest contracts we have, as you mentioned, HMPO and Autobahn. Let's start with HMPO. That's His Majesty's Passport Office. It's a very large multi-year deal in the UK for the public sector, and we're reaching steady state of our ramp for this phase of the project. Our IDP workflow, intelligent document processing, has made this a fairly seamless ramp, and we've been able to meet both the client expectations and our own. The fact that we've set it up on IDP means that we can configure the workflow, we can make changes to it within minutes, which makes us very nimble, and our turnaround time as far as client is concerned for any changes that are required is near instant. On Autobahn, I would say that project is a steady state. It's a project that we deliver for the German public sector out of Berlin. Berlin is quite an exciting place for us. The workflow improvements that we've put in place there are quite, they're very interesting. They're very exciting. It's almost like a workflow lab for us, and it's very nice to see that type of creativity at play.
Fantastic. Talk a little bit about AI. That's one reason for expanding margins. So how are you using AI, and how much of a cost savings is that driving?
Right. So I think AI you can think of as a cost savings play, or you can think of it as an enablement play. I think we prefer to see it as an enablement play. We see it as something that ultimately enhances our capacity. So we leverage AI to primarily expand our capacity, to be able to do more with less, effectively. So I think HMPO is a fantastic example of that. I know people like to talk about AI. It's kind of not a single conversation goes by without that. But in reality, being able to leverage it the way we've been fortunate to do so is very reassuring for me, because on HMPO, for example, we have around 70% zero touch rate. That means that of all the volume that we process for HMPO to make them digital on this project, we don't use any human touch. And AI helps us to reach that kind of percentage. So that's very reassuring. We use it for a number of bits and pieces in that workflow: autocorrection, validations, extraction of data, and making sense of it. So for the remainder of the work that we do, that 30% that AI can't quite get there yet on, we use humans, and then we've set it up so that we can snippetize it, and by snippetizing it, we can manage our cost right shoring as much of it as possible. So I think in a nutshell, if you think about it, we have a massive project with HMPO. It's going to last a few years. They need to digitize birth, marriage, and death certificates dating all the way back to 1837. They have failed a few times in the past because they couldn't find the right kind of solution for it. We won that deal based on the solution offering, or rather the solution we proposed. So not based on price. And I don't think that the project would be possible or manageable in terms of cost if you were to do it without a high degree of automation.
No, not at all. So, Andrej, talk a little bit about the competitive space out there. What is that environment like for business process outsourcing, automation services you provide in Europe? And I mean, are you seeing any pullback, hesitation from potential customers out there?
Not really. I think we've made I think there are two key forces at play here, or two key trends. Trend number one is, public sector is a large, sizable piece of the overall European economy. So even if you're to break it down into individual countries, public sector as a percentage of GDP is almost half compared to the U.S., where it's about a third. So you're going to have many more opportunities to pursue. I don't think that trend is going away. In fact, I think with all the different objectives that those governments have, you're going to see probably more opportunities and more opportunities that require a high degree of automation for them to be viable, for them to be appealing. So I think public sector wise, if things continue the way they do, you may see some redirection of funds and reprioritization, where some of it goes to defense spending, et cetera. But, are the opportunities there in public sector? Yes, they are. Will they remain there? Yes, we believe they will. In the private sector, I think you're seeing a few different trends. One of them is that some of these financial institutions that we traditionally work with, for regulatory and other reasons, they've started to insource some work. So I think what we may be seeing there is a potential shift in some of our opportunities, where we go from both service and technology revenue into providing more of technology element. So we would be licensing to them our solutions because we've been working with them for decades. So the domain expertise is there, and I think that's those are, broadly speaking, the two trends we may be seeing in Europe.
Wonderful. Thank you for that. And talk about where you ultimately see margins headed based on your pipeline, and how much of that is coming from this mix shift towards the higher margin technology segment versus improving margins in bill and payments.
So we've done a lot of hard work over the course of 2024. We started off, and I'll make sure that the audience is aware. We have two reporting segments. One is bills and payments, and the other one is technology segment. The technology segment is the smaller of the two. It's about 30% of our revenue. Generates margins of about 50 to high 50s or 60%. So obviously very profitable, a very appealing part of the business that we would like to grow. We plan to invest in it, both in terms of people, both in terms of know-how, and making sure that we have stability in that piece of the business. And then you look at bills and payments, which is 70% of our revenue. We started off 2024 at about 13.5% or so of gross margins, and now that you look one full year ahead, where we are, we're touching 20%, and that's something that we're very proud of. That's something that we have worked hard on, and our ultimate goal is, if we can leverage the kinds of tools and the level of automation that we're seeing in some of the more recent projects that we're ramping, I don't think it would be possible for us to drive the bills and payments margin towards 30%. If you then take that 30% gross margin in the bills and payment space, and you combine it with the 50 to 60% margins in the technology segment, and you combine the two, then you can make your own conclusion as to where that leads. But that's where I think we unlock a lot of value for our stakeholders.
Wonderful. Well, Andrej, thank you so much for this update. Great progress, and we look forward to continuing along with your updates. Thank you for your time today.
Thank you.
All right, everyone, we'll be right back with our next presenter.